Jason Helfstein, he's managing director and senior analyst at Oeppenheimer. Jason, you cover a number of these companies. Let's start with Google. What's your expectation?
Sure. So Google, they have the most exposure to the reopening, whether it's, the travel industry, live entertainment, as well as local businesses. So the thought there is that, they're probably the best positioned from what does it look like? When we've taken a look at street numbers, we're about 3% above the street for the second quarter and about 2% above for the year. So it does look like they're set up for a very nice beat.
Do you care if Amazon does a stock split? Does that have any significance for you?
Look, I think it helps the retail investor. Even if you split it, it's still, not a $10 or $20 stock. It's still, a good amount of dollars per share. But look, generally, the retail investor does tend to like the stock split, but there are products, as you know, in the market that now allow you to buy, fractions of a share. So it's probably less impactful today, than it would have been a few years ago.
Yeah, and we've spent so much time talking about these 8 trillion mega caps, but we also have Snap and Twitter reporting this week. And again, kind of anecdotally, but it seems to me that Twitter has lost some mojo. It's just there's so many other places to be right now, whether it's TikTok, you name it. I believe you still have a buy on Twitter. Correct me if I'm wrong.
That's
what
right.
does the company need to say, and what are the expectations for its report on Thursday?
Sure. So I think why you've seen kind of the stock maybe languish a bit is they hosted an investor event and kind of gave their multi-year outlook that they were targeting basically, close to 50% growth per year over the next few years, and kind of laid out their goals to get there, and kind of the stock kind of rallied on that, right? So you kind of have an information vacuum. I can't imagine they're going to give you any meaningful update. And in fact, if anything, they may have to remind investors that the rate to get to that will not be linear, right? So you'll have some quarters that will be, very good, and you may see a slowdown. Just simply, Twitter has the least built out ad tech plumbing, we'll call it, out of all of the companies that we're talking about. And so while Snap is, was reported last week, really is in a position now to get those dollars as they come in, as the economy reopens and budgets are being raised. Just Twitter's going to have to work harder to get those dollars.
Shepard Smith here. Thanks for watching CNBC on YouTube.